is lesson 11 of the Quantopian pipeline. It's really pinnacle of putting it all together. Now that we've covered all the basic components of pipeline, let's construct a pipeline that we might want to use in an algorithm. So let's just explain what we're trying to do here. We want to create a filter to narrow down the types of securities coming out of our pipeline. In this example, we will create a filter to select for securities that meet the following criteria. It is a primary shares, it's listed as a common stock, it is not a deposit receipt, it's not traded over the counter, it's not when issued, it doesn't have a name indicating it's a limited partnership, doesn't have a company reference entity indicating it is an LP, and it is not an ETF. So why these criteria? We really want to focus on primary shares and common shares as well. And the rest I'll leave it to you to actually have a read through. Let's come over to the actual notebook itself. So we want to import these basic things that we've consistently and regularly used. So coming over here, and we also want to import Morningstar and also is it a primary share built-in filter. Okay, now let's define our filter. So is it a primary share? That's the first one. The second one, is it actually a common stock? We don't want preferred shares. So ST00000001 indicate that it is a primary stock. Is it a depository, so-called, is it depository? Okay, meaning an ADR or GDR. So we find that it is, then we do use the squiggly to say the flip, okay, to do the inverse of the flip. Is it we find those which actually states it is over the counter, and we do the flip. It's also we don't want not when issued, and also with LP, and also with limited partnership as well. And we also want those with market cap. We don't want a zero market cap as well. And we create this filter called tradable stocks, and basically combining all of them. So basically those are the intercept of these 2, 4, 6, 8 so-called filters. So note that when defining our filters, we use several classifier methods that we haven't yet seen, such as not now, start with, ends with, and matches. You can actually find the documentations on these using this. The best way to make use of this is as and when you need it, go and look it up rather than try to learn all of them now. The next thing is that we want to create a filter for the top 30% of tradable stocks by 20-day average dollar volume. So using the built-in average dollar volume, put in the window length of 20 days, and we want to mask it using the tradable stocks, which is this one here, and for those between the 70th and also 100th percentile. The other thing with the Quantopian is that it has a built-in base universe. Now we've just defined our own base universe to select tradable securities with high dollar volume. However, Quantopian has two built-in filters that do something similar. One is Q500 US, the other one is Q1500 US. Both are built-in pipeline filters that select one select 500, the other one select 1500 liquid stocks each day. Constituents of these groups are chosen at the start of each calendar month by selecting the top tradable stocks by 200-day average dollar volume, capped at 30% of equities allocated to any single sector. So I suggest you go and have a look at it because it is quite detailed and listed here. But here we want to import the Q1500 US and define that into our variable called base universe. Now that we have a filter base universe that we can use to select a subset of security, let's focus on creating factors for this subset. For this example, let's create a pipeline for a mean reversion strategy. And this strategy will look at the 10-day and as well as the 30-day moving averages, which are focusing on the close price. Let's plan to open equally weighted long position in the 25 securities with the least, meaning most negative percent difference, and equally weighted short positions in the 25 with the greatest price difference. So basically we're looking at the gaps between the 10 days and 30 days moving average. If they're really wide, okay, we look to short them. The earlier example was really positive and the other one is really negative. Okay, with the ones with the really negative, maybe oversold in the short term, so we long those. To do this, let's create two moving average factors using our base universe filters as a mask. So that way we reduce the computation that the pipeline has to do. So the mean 10, close price, window length 10, and we mask with the base universe. Again, the close price, window length 30, and the mask is the base universe. The percent difference is calculated this way, and then we select the top 25 and bottom 25, and the securities we want to trade are the shorts and longs. The top 25 we want to short, the bottom 25 we want to long. Since our earlier filters were used as a mask as we build up this final filter, when we use securities _to_trade as a screen, the output securities will meet the criteria outlined at the beginning of the lesson. So primary shares, non-ETFs, they will also have a high dollar volume as well. Finally, let's instantiate our pipeline. Since we are planning on opening equally weighted long and short positions later, the only information that we actually need from our pipeline is which securities we want to trade and whether or not to open a long or short positions. Let's add our longs and shorts filters and set our screens filters to trade. Let me just run these. I can't remember which one I run now, so let me run those critical code cells. And now run the pipeline. So let's walk through this. So we have a base universe of 1500 US, and we calculate the moving average for 10 and 30 percentage. A difference between the 10 and 30 base universe is the mask, and then select shorts on the top 25, longs on those in the bottom 25. The securities we want to trade are the shorts and the longs. Provide the columns and then screen with the securities to trade. Where do we get the securities to trade? Is from, let's see, securities to trade is this one here, the longs and the shorts. Okay, so as we run the pipeline for the 1 day 2015 May 5th, let's see what is the information that it can return. So we have the true and false for longs and true and false for the shorts. That's really how we actually select stocks to buy or to sell, using the so-called algorithms that we define for in terms of this mean reversion strategy. So that's the end of this lesson. We are going to use this algorithm we just defined and put it into the IDE, run a backtest and see how it performs.